I try to explain that same thing to my students, and I think you just did an eloquent job there. It's funny because when I meet a bunch of people that have been, in the crypto markets for 6 months or even 6 years, a lot of them don't have that. I call it almost like an algorithm in your brain. You're almost programming your behavior before it happens. You're almost like the Terminator. And they're used to, checking prices on mobile phones, trading at 2 a.m, trading when they're happy, they're sad, they're drunk, they're mad, and trading with more frequency than they should be. And then I come in and I say, guess what? We're going to trade maybe once a week, maybe once a month. Before the trade goes on, you put a stop loss in and you know where you're taking profits. And they're like, you're taking all the fun out of this. And I'm like, this shouldn't be Netflix. This is trading and this is P&L. You just mentioned stop loss. Let's talk about this, Scott, because I felt like I put a big wet towel on my students when I talked about stop loss. And it's funny to see the brain argue against stop loss, right? Like when you tell your kids they got to go to bed early, they come up with all sorts of really good reasons why they shouldn't. With the stop loss, they say, well, what if I'm hodling? The markets are volatile. I get triggered. There's traders out there trying to trigger my stop. I'm sure you heard that one, Scott, right?
Oh, yeah.
So talk about, first of all, what a stop loss is. And also, where's that program profit trading in there? And maybe we can give an example. Like if someone went into Bitcoin right now at say 48,000, what would be a really sensible, smart, long-term strategy for putting those pieces in? And maybe explain to people why their emotions are going to change right after that trade.
Sure. There's a lot to unpack there. So looking at Bitcoin, as an investor, I'll buy it at every price. And I do. I dollar cost average blindly. As a trader, this is not somewhere that I'm interested in buying. In fact, if I was a shorter term trader, I might be looking to sell a bit, right? If I was just scalping purely with no emotional attachment to the asset and no longer term position. To me, a key level on the Bitcoin chart was 42,000. That was the top of the entire move from the all-time high at 20. We stalled there for about a month. Tesla bought $1.5 billion worth of Bitcoin. Price skyrocketed for 42 through 42 and headed up to 65. When it lost that 42 level, to me, was sort of when the shorter term bear market narrative was entered. And we stayed there since May 19th until just a few weeks ago, right? So almost 3 months, an entire boring summer of people finally getting out of their houses and enjoying their lives and not trading. And it took quite a bit of time to consolidate, accumulate, and break that level. So levels are flexible. I'm not saying if price goes to $41,999 that your thesis is broken. But to me, if I was going to enter a trade, and why I wouldn't now, that's too wide of a stop for me. Because I think everything still looks bullish above 40 to 42,000. So that would mean I'd have to put my stops in the 30, below 40,000 somewhere. And that's just way too big of a gap to make the risk reward worth it buying at 48 as a trader. So I personally, I'm always looking to enter more. I have bids in that area. I'm looking for the drop to buy. And if I miss it, life goes on, right? So my stop loss would be maybe 39,500, 39,700. So I'd much rather enter at 40 or 41 than enter at 48, right? Because my position size would have to be so small entering at 48 to be able to manage risk and only take a small portfolio loss. So that's one thing. The general importance of a stop loss is that, and what people don't realize, they view it themselves as losing. It's not losing. It's an invalidation of an idea. It's admitting you're wrong. That's the problem people have with it, of course, because people hate to be wrong, and that's what destroys traders. But it's an opportunity to find a better entry, in my mind. And if you say that mantra over and over again to yourself over years, you'll start to not view it as a loss, but an opportunity for a better entry. Okay, well, I stopped out here. That means it's going lower. I can get in lower, right? If my thesis is correct, let's look at the next area where I would buy and try again. And you can make up for that entire loss manyfold if you're right on the next entry. So to me, you're gambling if you do not have a stop loss. So what's the importance of a stop loss? You're looking at a chart. A chart is just a visual manifestation of human emotion, like we talked about before. Why do support and resistance and all these lines exist? They exist because this is where all the same people are going to make the bad decisions. So your goal by looking at a chart and as a trader is to make a good decision when everybody else is most likely to make a bad one, right? This is where everybody's going to panic sell. I'm going to buy it. It's going to go the other way, counter trading the crowd. But you're gambling if you don't have an invalidation, because then you're just emotionally hoping, and hope is obviously not a strategy. So the first way you should approach a trade, you look at the chart, figure out where would I ideally like to be in, right? What's a good entry? Or you can start at the stop loss. Where is any bullish idea invalidated? Figure that out. Figure out where your ideal entry is, calculate that gap, and then back calculate it to your portfolio size to figure out the size of your position, right? I want to lose 1% of my portfolio. This is how much I will lose on this trade if I'm wrong. This is how the size of that trade to make that math work. Seems complicated, seems boring, like you said, but it is. There was a famous quote that I can't place the trader that said it, but that trading should be more like watching paint dry. If you want excitement, go to Vegas. At least you get free drinks, right? It should not be gambling. Trading should be extremely, extremely boring because you should have a plan and wait. And then once the plan's enacted, you shouldn't watch the chart to figure out what's going to happen because you know where you're going to exit, either up or down. So if you're trading without a stop loss, you are gambling. 100%. 100% gambling. And like I said, this comes back to the core idea. Do you want to be right or do you want to be rich? Because your average trader, maybe if they have an edge, is right 55% of the time, right? Yeah, I was a part of a sports gambling group where we bet on every single NFL game for the entire season on a spread. And the person who gets the most right at the end of the season out of hundreds of people wins the entire pot, huge pot. And every year it's consistently someone who gets 56, 57% of them correct, right? Against a spread, because Vegas is good. So your edge doesn't come with being right. Your edge comes with being wrong small and being right big, right? So taking the right trades where you're going to lose very little if you're wrong and where you have a ton of upside, so that 10 great trades in a year can invalidate 200 misses, right? And so once you program yourself to realize you weren't wrong, it doesn't matter if you're wrong. It was just you took a small loss and your next one will pay for it, or your 10th one will pay for it. It really starts to change the way you approach the market.
Yeah, that's powerful. I like that, entering at a better level. And it's when people get cleaned out, it's that one time they didn't stay disciplined and didn't have the stop, right?
Correct. You lose your entire stack on one trade because you get liquidated and moved your stop loss, or you revenge traded. That's the other one, right? Your stop loss does hit, and then you enter immediately again because you feel like you were wrong, which is the same thing as not using a stop loss.
Right.
Revenge trading was my biggest problem as a trader in the early days because I hated being wrong. I got pissed off and I came right back in. And it turns out I was actually right to have my stop loss and take that loss because that was a good plan that I had before I was emotional. And revenge trading over and over again, you just basically keep taking the same loss of the same trade. It's like banging your head against the wall.
How long would you wait between getting stopped out and getting back in? Like hours, day?
It could be momentary. I mean, it could be literally, within an hour, certainly days. I came up with a rule for myself, and people need rules. You need to know yourself and come up with rules. And I share this with people all the time. Very difficult for me now because I'm doing so much analysis for other people. But if any trade that closed, whether profitable or at a loss, I close that chart for 24 hours and don't look at it. Like a firm rule that I'm not allowed to even utter the name of that asset for 24 hours, right? Very, very hard with it's Bitcoin and you're looking at it all the time, but and so that also prevents you from jumping back in. The same thing that makes you revenge trade when you lose makes you jump back in higher when you exit a trade for profit and think it's going to continue going up. So you buy again and lose the entire amount that you had made.
That's a great rule. Maybe it should be longer than 24 hours. I guess it depends on what you do and your frequency.
Yeah. Right? If you're a day trader and you're only trading 3 or 4 assets, I think 24 hours is sufficient.